Alright, we don't have much time to do another intro. This is breaking. We are down 450 pips right now in the last hour on the dollar yen. We just tapped 153, which was a lot of people's quarterly expectations. This is just absolutely. Let's go ahead and look at some of the responses here. 15 minutes ago, 16 minutes ago. I mean, it was down like 200 here. Let's go to like a 5-minute chart. Look how quickly this damn thing moved. Oh my god. Let me go ahead and slap on a little centered moving average there. Let's see here. Around here, this was FOMC. So we went down post FOMC, had a rebound. Dollar was getting a bit stronger post FOMC. And then Bank of Japan intervenes. Holy smokes. And so many people over Twitter are freaking out. Yeah, more intervention has come in. Oh my god, this is 106 rebound in the last 5 minutes. Oh my god. Yeah, it looks like a shit coin. It does look like a shit coin. Oh my god. I mean, I've seen charts like that all the time where it's like people comparing, hey, is this a shit coin or one of the world's predominant currencies? Oh my god. Yeah, dollar yen getting smashed again. Just 10 minutes after US equity market closes. Despite the ES week close, this could be positive VE. You mean EV in risk/crypto? I don't know about that. Now, I just ended the FOMC stream, and in the FOMC stream, I said I'm going to have the expectation that the US dollar continues to bounce higher. Well, now, given this sell-off, I'm wondering what DXY is up to here. Yeah, check that out. DXY looks exactly the same. A lot less significant of a hit. It's only down about 0.5%. And it's rebounding just a bit. Dude, that yen is pulling down the US dollar price. Let's check out Euro dollar. See how this thing is holding up. It's doing all right. I mean, we went all the way up to here on euro dollar. So all of the US dollar short trades have rebounded here. I did catch this short here into FOMC posted. And now it's more or less a matter, like the thing went right back to my entry. Now it's really just a matter of, well, how low can you go? Because this 153 metric here was the quarterly expectation for the dollar yen, like 1 to 2 quarters out. And now in the span of, we've hit 3 and 6 month out price expectations. So this Friday, I'm going to be doing a week ahead stream, and I'm going to be going over all of these weekly outlooks from different institutions to see how they are going to be updating their Japanese yen expectations. I mean, I'm just going over expectations here for the yen now, right after FOMC. And dude, now with this move in, I have to discount everything that I've read, and I've already read like a dozen or so pages of outlooks so far, just post FOMC on the yen. So now I'm gonna have to, I don't know, wait till tomorrow's daily briefs are out, wait till some week ahead outlooks start coming out over the next 48 hours, and reassess what the expectations are going forward, because now yen has hit a lot of price targets in the last hour for many institutions. Like 153 was 153, 152. That was kind of their expectation going into the summer. So now there's probably going to be people saying, well, 145 is going to be my 3-month, 6-month expectation. But you don't even know if that could get hit in like the next month if they do an intervention again. I don't know if they're going to need to. I think the market is probably going to be sold on this secondary move here, kind of solidifying things. We're going to check out the yield spreads. The yield spreads over the last day are really freaking negative. Yeah, they're back to where we were about a week ago. So the yield spreads have to continue going lower from here. And you know what? I'm actually inclined, based off of what I've read so far, that these yield spreads over maybe the remainder of May, at least on the dollar yen side, are likely to improve. And the reason why I think that is because the BoJ and the Ministry of Finance, they're going to be pushing their yields higher in June. We're expected to get another rate hike out of the BoJ. Let's go ahead and refresh this. And then out of the Fed, we're expecting... Who did this? Duh. You don't know, duh. We know who did this. We know it was you, Japan. We know it was you. It's happening. Japanese government intervenes for the second time. Note the DXY pulling back as well. This is the start of something bigger. And quoting Lin on thoughts. Let's actually check this out. This has 11 replies to it. And then people posting random charts. Let's check out the latest here. Yeah, BoJ making a move after the Fed's speech. They'll do anything to not raise rates for their debt load. Yeah, there you go. Nice hit. Some guys who got long the yen for whatever reason into FOMC and then held it post FOMC are really sitting pretty, to be frank. Yeah, check this out. Oh man, we gotta check out like Euro, JPY, pound, yen. All these yen pairs are probably doing, yeah, look at that. Down so far 275 pips. We can just look at this and filter by change. Wow. Yeah, so pound yen is down 362 pips. It's actually down more than the dollar. Wow, so the yen against the pound is way stronger than the dollar. However, on a percentage move basis, it would be even split between the Canadian dollar and the yen. You can see negative 1.84% there. And then on a relative percent change basis, the dollar yen is down to 0.14% there. Oh, John Kicklighter. Man, great commentator. Looks like we have interim low in this after hours USDJPY move. To be fair, on a 1-minute chart. All right. If it's John Kicklighter telling me check out the 1 minute, I'll check out the 1 minute. Low at the moment is almost exactly at 153, and now back up another 150 pips in less than 10 minutes. In all seriousness, I'm kind of keen on agreeing with John here. Check with your doctor before turning your charts below 5-minute time frames in volatile markets. Yes. Yes. Check with your local kick lighter. Oh man, I need more of kick lighter in my analysis. Yeesh. Like all his stuff. Holy smokes, you guys. Let's go ahead and draw something here. So it pretty much fell almost 500 pips, about 5 pips off from 500 pips here on the pound yen. It went from 197 to 192. Oh my god. Oh my god. 500 pips in the span of how much time was that? This is a good time for the price in. And can I grab this? All right, put this over here. Yeah, in the last 40 minutes, we moved 500 pips. Absolutely freaking insane. Apply defaults. Yeah, there we go. And let's send this drawing to the back so it's not on top of stuff. Send the back. Yeah, there we go. That looks way cleaner now. So yeah, that's probably the low. Let's go back to the dollar yen. Do the same. 447.8 pips. Also in 40 minutes. Wow. Let's see. Can we translate this post? Oof. Don't know how well that did. If it ain't opportunistic, I don't know what is. Disgusting across the board for the last hour. Yeah. What, NQ moved? No, NQ... I mean, this is like post FOMC, not during the intervention. I don't know what that guy's on about. Let's check out a few other yen pairs. So the euro yen also got hit like a ton of bricks. Down 429 pips in the last 40 minutes of this drop. Holy smokes. And Aussie and New Zealand yen, let's check that out. I think these guys actually held up, all things considered. Yeah, while everyone else is falling like 400, 500 pips, the Aussie yen is down 250 pips. And the New Zealand yen, also, they seem to be recovering, you can see on the price. And the New Zealand is down 224. So actually, New Zealand is holding up pretty darn strong here. I'm gonna put up a poll for the few of you guys watching here live with me. Is this a low in the yen? Let's see here. Is the JPY done moving lower for today? Start a poll, yes or no. Is the JPY done moving lower for today, yes or no? Mr. Kicklighter thinks it is, and I'm inclined to agree with him. You know, there's a ton of guys just doing ads here. Let's see here. USD yen crowded trades can unwind very fast. It's get me out, I'll give up some on the exit, and then as support gets hit, stops get triggered, adds to the supply, and the pace of the sell-off. Similar to November 10th, 2022, after the CPI print. Is it intervention? I doubt it. Really? Well, he's from Forex.com. So, I don't know. Maybe. But I would assume, and everyone else is interpreting this as, the BoJ probably sold into this, the MOF probably sold into this, and then created these cascades here, which accentuated the move. Let's see here. But I could be wrong. Somewhat of uncharted territory for them there. 400 pip hourly candle strikes me as intervention, especially since the market pushed back hard after the last one. It's a good chance to press. Still think it means nothing with such easy money conditions in Japan. It's possible wouldn't fit the risk profile of the BoJ or MOF, and it's not something they take lightly. A crowded carry unwinding can move really fast. I mean, yeah, he makes a good point. I understand his expectation and his hesitation to call this MOF JPY intervention. For all intents and purposes, I'll give that a like. But still, my first impression is, Japan intervened. Ooh, look at that guy. He got a couple of sells out right here. I don't know. It looks like he's using Heikin-Ashi candles, so those are probably really bad entries. Heikin-Ashi candles don't actually show you the real price, everybody. They show you average prices. Not the price you might actually be trading at. A lot of people in Japan are waking up and talking about the moves here. Oh my god, this guy is just straight up saying, why don't you understand that it's useless? Yeah, the guys who were conveniently short positioned going into this are just living the dream right now, aren't they? All right, let's go back to the top post, refresh this. A fall of 400 pips from 157.7. This decline is undoubtedly due to currency intervention. Long entry from the bottom of the decline. So there's a lot of people getting long here. Right around the 153 mark on the USDJPY side of things. So a lot of... let me go ahead and copy this link. And if I paste that in here... No. Did Twitter... Did they get removed of the Twitter text thing? There used to be a way for you to put your tweets into your charts. Yeah, I think they got rid of the Twitter one. That kind of sucks. I'm scared to try and catch the falling knife. Yeah. Yeah, but there's a lot of guys who went long here. I mean, I'm just gonna draw a little box around this spot. Let's see if I can just find the box drawing. Yeesh. Yeah, in this, call it 100 pip range here. The Daredevil Extreme. And let's put that in the inside center, bold it, and make the text white. Lots of long speculators in this 100 pip range who lucked out right there. But we'll just see how lucky they are over like the next hour or two. And I'm fast and actually post that in the Forex trading channel. Man, oh man, yeah. It was the Japanese yen which stole the show after Jerome Powell's press conference, with dollar yen falling 450 pips. The severity of the move smells of another BoJ intervention, and one that seems well timed if it wanted to capitalize on a weaker US dollar. Yeah, the daily high to low ranged 500 pips. It hit 153. Yeah. Let's see here. Anything new? Oh man, it looks like 50-50. Is the JPY done moving lower for today poll? It's split 50-50. Again, only 2 votes, so it's like, eh. And not a whole lot of people interested in watching here post FOMC. We just did a pretty big FOMC stream, and there's going to be a highlight posted in about 45 minutes that kind of reviews what happened during FOMC and what the expectations were going forward. But now those expectations probably are going to change here post this intervention. God, there's so many guys trying to just, especially in Japan, who are just trying to use this search term as marketing material right now. I'm trying to actually find guys talking about the yen move here. Oh, please tell me Weston is awake right now and giving commentary on this. Well, never mind. Oh, Weston. Wow, he called it ahead of time too. Look at that. This is not JPY buying, this is USD selling. And likely near-jerk position exiting / unwinding that. In other words, JPY downside is far from being off the book. And then it reverses. Again, expectations can change incredibly fast. Okay, US dollar versus US 10-year yield suggests there's nothing the BoJ can do to stop JPY from hitting a 170 and maybe even 200. Equals there's nothing the US can do to stop the US Treasury yield from hitting 6% and maybe even 9%. if we don't believe the latter, I don't, how can we believe the former is true? You know what? From some of the outlooks I've read so far, that seems to be the consensus, is that US yields will not move higher from here. And I think people are getting ahead of themselves on those expectations just a little bit. They are reasonable expectations, and they are the consensus expectations. And I would be in line with those views. But I think we're putting the cart before the horse at the moment with all these outlooks that are saying, hey, over the next 2 or 3 months, there is, no likelihood that the US yields go significantly higher than or to the Fed cash rate. I mean, guys, rate hikes are still a thing that can happen, especially if growth in the United States doesn't slow down enough, including if employment doesn't slow down enough, right? If employment still holds up, if consumer spending still holds up in the United States, if just growth metrics net hold up in the United States, and then at the same time you have inflation not moving over the summer, you cannot rule out that a rate hike could still be in play here. There's a lot of uncertainty over pretty much up until July, I would say, that we don't necessarily know if it's, the nominal thing is to say, oh, well, of course we're not going to see any more. We're not going to see yields go significantly higher from here because they're already so close to the cash rate. But if it becomes reasonable to begin expecting the Fed to hike, then we will see those yields go higher. And that would send this dollar yen higher. That would really make the dollar super, super, super freaking strong. And that view is being discounted very heavily. So I wouldn't be totally throwing that idea out with the bathwater, right? And it's, in my opinion, still too soon to say, oh, the dollar's going to get weaker from here. Well, what if in 2 weeks from now we get the April economic data and it still goes along those lines that I just outlined for the rate hike scenario? Like, that really could screw up a lot of people who position now for those yields to stop increasing from here. So there's significant risk to people who might be, frankly, positioning too early. Don't get me wrong, there's good reasons and good expectations to have for falling yields. But you get this next bout of economic information and see the US still growing incredibly strong and inflation still holding up, and then you get the April data here upcoming in May, and then you get the May data in June, and then you're getting the June FOMC. If the June FOMC says, oh, we have to look at our probability of a rate hike potentially, it'll send these yields to insane levels. That's over the next 2 months. That's a real risk that could be in play still. And that would keep the Fed super higher for longer. Like higher into the middle of 2025 longer. Yeah, I really find it fun and enjoyable thinking about these different scenarios and outlooks, and then looking at what the consensus view is, and then looking at what those risks are. I might not always espouse them in the most beautiful and succinct way, but I find being able to do this type of exercise and these types of thought experiments really helps bring a lot of clarity to, okay, what are the risks to this nominal expectation that I generally have? And what are the risks of this thing underperforming, outperforming? What are some of the more immediate things that can go wrong with this? What are some of the longer term things that can go wrong with this? And the hard part is just as you think out further and further into the future, you have more and more little events that can throw off your expectation. Like, it's very rare that you have a set of economic indicators that go exactly as predicted for multiple quarters in a row, unless you have a very stable, very frankly low volatility economic environment. And we definitely don't have that right now. I mean, you move 500 pips at 40 minutes and you're not in that economic environment, to say the least. All right, let's refresh this, see if we can find anything else. No, doesn't look like we're getting any new commentary out of this. I'm sure everybody on YouTube is going to be talking about this as like over the rest of tonight. They're going to be talking about the FOMC. They're going to be talking about this move here. And in all seriousness, I'll go ahead and say that my stream here is pretty much done now. And this is my little video for everyone who's like, what's going on with this move here in the yen? There's longer term ramifications to start thinking about now, as this yen move is likely to actually stick here. And yeah, I'll say seriously, thank you all you guys for watching on either such short notice live or watching the VOD afterwards. Appreciate it. And if you want to hang out with me and go over some of these events as they're occurring, go ahead, hop into the Plan the Profit Discord, links to it in the description. And I will see you guys in a bit.